Hi, Jim Gore from THOR Wealth Management. People are questioning whether we're in a recession or going into a recession. Well, you have to understand the biggest component of our GDP, and that's what this chart is showing you here on the right-hand side. The biggest component right now of our GDP or our economy is consumption. Consumption is 68% of our economy. So you need consumers out there to start buying in order to have a strong economy. And if the consumer's not doing well, then the economy's not going to do well. So let's see what the consumer is actually doing. And this is looking at consumer sentiment. People are feeling pretty awful out there. Consumer sentiment actually dipped the prior quarter below any other point going back to 1950. We felt worse than we did back in the recession back in the 1980. We felt worse than we did at the bottom of the market back in 2009. It's gone up a little bit, but it is one of the lowest readings on consumers. So consumer does not feel very good right now. And if the consumer's not feeling good, you have to be concerned about the consumption factor on the economy. And if you look at retail sales, you'll hear retail sales are up. But you really have to measure it versus inflation. And this is what this chart does here, is this takes out the year over year change in retail sales minus the CPI, or the Consumer Price Index, inflation, if you will. So you can see here we had a sugar high, a huge sugar high right after COVID. And that was all the money that the government pumped into the system. So you had retail sales were up 40% on an inflationary basis. That's a huge jump. And you can go back here for the last 30, 40 years, you can see that we've never had a jump up like that. But more importantly, if you look at where we are right now, and even though sales are positive, if you take out inflation, so yeah, sales are up maybe 5%, but inflation is 8%, you have 3% less in your shopping bag. And right now, real spending is negative. So the consumer is not buying as many items as they were in the past. We certainly aren't buying as many items as we were 18 months ago, and that sugar high is worn off. So the consumer is not buying as much goods right now as they used to. And another way to look at if the consumer is healthy or not is what is going on with their debt levels. And if you look at this chart here, this is looking at the default rate for auto. So basically all these auto loans that were given out in the last 2 to 3 years, are people paying those loans back? Are they able to do that? And what we've actually seen is we've seen a jump up, and that's a year over year change in default rates. So default rates, they did go down during COVID because people had money, excess money that the government was giving them. Now they don't have that excess money, so we're actually seeing default rates go up on automobiles. So this is just a sign showing, hey, the consumer's not as healthy as we would like them to be. And if the consumer has too much debt, that is a problem for consumption. Another way to look at it is seeing how much debt we have, and this is looking at credit card debt levels. So the peak year in credit card debt levels was right before the COVID hit, and we were looking at $0.925 trillion in debt levels. It's actually up to that level, but you saw consumer debt levels, credit card debt levels actually went down during COVID. We had cash. We were using cash. We paid down our debt. But over the last 15 months, credit card levels, debt levels, have gone up 20%. So if you put this all together, looking at, we need consumers to start spending more money in order for the economy to grow. Well, we're not going to have that with consumers feeling poor, right now. They don't feel very good. And they're having excess, their debt levels have increased, and their spending is showing up where they're not spending as much money in real dollars. If you take out inflation, they're actually spending less. So this is showing us here that the consumer is weak, and this is what happens when you're in a recession or going into a recession. So the consumer is not strong, and this is not a good sign for the economy overall. If you have any questions or concerns, as always, reach out to us here at THOR Wealth Management through our website or give us a call directly. Take care and talk to you in a couple weeks.